Would you like to escape the rat race? Would you like to retire early? Potentially do that using cryptocurrencies. Well, it is indeed possible. In fact, a lot of people do it, and a lot of people are already out there with that financial freedom, living the kind of lives that they actually want to live versus living the kind of life that they have to live in order to, buy things they don't really need to impress people they don't really like. You can escape all that. You don't need to let that be your destiny. So in this video, I want to discuss how to retire early using cryptocurrencies. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic that you would like to learn some more about, then make sure that you subscribe to the channel, gently tap on the thumbs up button, just for the YouTube algorithm. You know YouTube loves this stuff, I don't know why. But if you could, it'd be super, super awesome. And of course, click on the notification bell to know when I put out a new video. So let's just go ahead and get straight into this topic. And first we have to talk about, well, how much money do you actually need? That's an important thing for you to determine before you can think, hey, can I actually retire and not have to work anymore? You're probably going to want to do something anyway. I mean, you probably, after laying on the beach for a few weeks, you're going to get bored. You're going to want to have some purpose in your life. But not having to work your 9 to 5, probably going to be a pretty good thing for a lot of people. So how much do you need to be able to get that retirement level, regardless of your age, or to get that financial freedom, which is of course what we're really talking about here? The classic calculation is 25x your annual expenses based on withdrawing 4% annually. So if your expenses are $50,000 US dollars a year, then you're going to need $1.25 million. I'm sure you guys all have $1.25 million just laying around, right? Easy peasy lemon squeezy. And if not, well, listen further because we have a lot more to discuss in this video. Now, I do also want to point out that that total amount saved could actually end up being a lot less with rates of return actually being so high in crypto. And I'm not talking just about buying Bitcoin and going up, X percent every year over time. That's also a very, very valid point. But you can literally just take dollars, right? If you can save up enough dollars, you can put them into different farms or lending platforms and just make some bank, right? So if you want to, for example, put your money into a platform like BlockFi or Celsius, well, all of a sudden that 1.25 million goes in half. Think about that. That's pretty gosh darn crazy. So now you only need $625,000 a year in order to get that $50,000 a year passive income. That's if you're getting around 8% in interest. Or what if you're using something like Anchor, which is currently giving around 19.5 to 20%, depending on the day, passive income? Well, then you only need $250,000 in order to make your $50,000 a year in passive income. And look, things are going to change over time. The rates are going to change. Deals aren't always going to be the same. I just wanted to give that little thought there to you for some perspective. If you can just dump stablecoins into the right place, you can actually probably retire a lot sooner than you think you can. And of course, invest in other things as well. Here's the thing though. In order to reach whatever that particular dollar goal might end up being for you, let's take your 1.25 million. That's probably a pretty good goal for a lot of people, in terms of long-term savings, building up, ensuring that you've got a portfolio that's not so dependent on potentially unmaintainably high yields in a lot of these different platforms. So we have to get the money in order. How do you do that? Well, by getting more money. That's how. One of the most common ways people do this is cutting the fat. We use the example here of coffee, right? Because that's something I think everyone can relate to. If you go and buy a takeaway coffee, let's say it costs you $5 every day. So Monday to Friday, 50 weeks a year, you're spending $5 a day. It's $25 a week on coffee. However, if you were to make your coffee at home, it's probably going to cost you, 20 cents? That's a big savings. That's $4.80 a day. $24 a week you would be saving. Times 50 weeks, that's $1,200 a year you would save right there. That's a pretty big deal. And there's lots of little things that you're going to be doing that you could probably optimize a bit. And that, of course, comes down to reviewing your budget, asking yourself those hard questions. And of course, the more you can invest sooner, the more likely it will be that you can actually retire early. So actually taking a few things that maybe are little pleasures, whatever it might be, and of course you need to keep living a good life, obviously, but still, there's little things you can probably cut back on, or maybe you can do a few extra hours of work. Maybe an extra 5 hours a week of work wouldn't drive you crazy, but could actually significantly boost your income to be able to invest. And by taking those harder hits now or for the next couple of years, you can get enough money to be able to retire in 5 years. It'll be worth it then, wouldn't it? So this is something for you to keep in mind. And of course, now that you've saved that money, whichever ways you might be deciding to either save more or to earn more or to do both, then of course, what do you have to do? You have to invest that money. Get invested in the market. The simplest way to do that for the majority of investors, dollar cost averaging in. And when we talk about cryptocurrencies, you really want to be looking for probably your safer plays, your Bitcoin, your Ethereum, your Chainlink, your Aave, different things like this. Not your Ethereum Classic, that's just etc. By the way, don't buy Ethereum Classic, guys. This is the time in the market versus timing the market approach. And I know I've shared this example quite a few times, but it's just such a relevant and powerful example. If you had bought $100 a week worth of Bitcoin from the previous top in 2017, you bought at $20,000. Boom, absolute high watermark. $100 a week, every week after that. You would have invested up until this point around $20,000 into Bitcoin, give or take, right? A little bit, but it's approximate. But you would have put about $20,000 of your own money in, but you would now have approximately $100,000 worth of Bitcoin. So you'd be $80,000 in profit from your dollar cost averaging. If you look at Ethereum or Chainlink or any of these other coins, the numbers actually are dramatically better had you simply been cost averaging in to these strong coins. You don't have to gamble. You don't have to gamble on the newest hot dog meme coin. You can actually just stick to the fundamentally strong coins, average in over time, and you're probably going to do pretty okay. By the way, if you want to buy some good cryptocurrencies, you need to have an exchange account. Binance is the best place to be buying, selling, and trading cryptocurrencies. They accept more than 50 different fiat currencies. And if you use the link down below in the description to start your account, you're going to get 10% off of your trading fees and up to $700 in trading bonuses when trading futures over on Binance. Unfortunately, not available for you guys in the USA. So if you are in the USA and need a great exchange to buy some crypto on, go and check out Kraken. Kraken's a great option. They've got lots of awesome coins, lots of great functionality for you. So that is probably the best place for US users to be grabbing some Bitcoin. Link down below for both of those exchanges. Now, in terms of investing, obviously, the younger you are, the more risk you can take. But even if you're younger, you don't need to take on too much risk. That whole year of drinking home-brewed coffee, all that can be gone down the toilet in a moment's time. Leverage trading, 100x leverage, whoosh, gone. Now, leverage trading is a tool. You can use it if you're an experienced trader, but let's keep it real. Not a lot of people are experienced traders, so if that's not you, you don't need to be doing that. You don't need to be trading, right? This is a fallacy of trying to get rich quick. If you're a trader, you can trade. If you don't know how to trade, just invest. It's much simpler with a much higher rate of success. You can go out there chasing those new meme coins. I know the market loves these super high risk, super scammy meme Ponzi coins that are popping up all the time, and a lot of people make a lot of money on them. But many more people lose a lot of money on them. It's very, very risky stuff. If you're going to play that game with meme coins, then take it like a lottery ticket. Put $100 on random meme coin X, and if it does well, awesome. If you lose all your money, well, it's only $100. So don't go all in on these super high risk plays. Of course, there's also degenerate DeFi, which is you see these yield farms where you get 10,000% a year APY. Super risky. It's super risky. You know, you're spending all this time trying to save and work harder, and then you go and gamble it all. That's not how winning's done. That's not how winning's done. That being said, you should not write off altcoins. I know there's a lot of people who would only like me to say you should only ever buy Bitcoin and nothing else, and that's just not true. Altcoins represent the best chance to see massive returns on your investment. This is the 100x gains area. Coins like Aave, for example, 100x coin, Synthetics, 100x coin. So many coins did these 100x moves. And it's happening all the time. It's happening all the time. Polygon did 100x this year. Come on, man. That's crazy. That's crazy talk right there. You don't have to be an insider. You don't have to, gamble like crazy. You can just find these fundamentally strong coins, buy them, cost average into them, and see really, really big returns. That being said, not all altcoins are going to make it in the long term, so keep your position sizing accordingly. In fact, here's a few quick tips because, for one reason or another, some altcoins, they're just not going to go, right? They're just not going to be the big thing. They're going to fail with the technology. The team's going to exit scam. The team's going to have a big fight and break up, and who knows? Just there's 101 reasons why any cryptocurrency will fail, and a lot of them will. You're investing in startup companies in most of these situations, and the startup failure rate, whether in or out of crypto, it's very high. So keep that in mind. So when you're going into higher risk altcoin plays, right? This doesn't necessarily apply to your Bitcoin and your Ethereum, your Chainlink, etc. When you're going down to those small cap altcoins, keep your position sizing low. Only risk 1, 2, 3, maybe 5% of your portfolio if you're just super, super bullish on that coin. And I know you might be thinking, but hey, shouldn't I put 100% of my money on this coin if I'm really, really bullish on it? No, you shouldn't. Because there's also a good chance that in spite of how bullish you are, in spite of how good the connections are, how sweet the tech is, that it's going to totally fail and go down 99%. And then you've lost all that money. But if you only lose 1% of your invested portfolio money, it's not such a big deal. Second point, take out profits from high risk money and move that capital into lower risk areas. So these altcoins, right? You get an altcoin and it pulls a 20, 30, 40, 50, 100x. You better be taking some damn profits on that coin. If you're not, just slap yourself because you're crazy, man. Take profits. Get some money out of those coins. And you might be saying, oh, come on, it's easy to say take profits now, Lark. The whole market's down 50%. I've been saying take profits. I've made half a dozen videos on that over the last year. It's one of the most important things that separates out the winners from the losers in this market long term. The ability to actually click the sell button, take some money back, put that money into some Bitcoin, right? Some Ethereum or USDC. I've got a giant pile of stable coins because I did practice what I preach. I took profits when all these altcoins are pumping like crazy and they were going up by 20, 30, 40, 50x. I took some money out, man. And now I've got enough stable coins to just lend away, provide a great income. It's a nice feeling. So take that high risk money when it pumps, take at least a portion of it out. Take your capital back out. Take 20, 30, 40, 50% out. Take 60% out. You can keep a moon bag, sure. But you got to get some of that money out because the markets are so volatile, so unpredictable. You get out of that high risk play and move into lower risk plays, right? So just that's a really important point to take home here as a cryptocurrency investor. Fourth point, you have to create passive income. There's so much choice in crypto. You can, there's just off the charts the amount of opportunity here. Now, if you want to take a centralized lending service, they're super easy. They couldn't really get any easier. All you do is literally just send your crypto to your wallet on a service like BlockFi or Celsius, which are the most popular providers right now. Deposit it. They take it. They lend it out. They give you a percentage. It's super, super easy. So it's a great way to be earning income. Now, you can get higher rates doing what's called yield farming. This is when you're providing liquidity into a decentralized finance platform. There's lots of different options. It ranges from your rather safer plays from things like Bancor or Wire and Finance or Thorchain, right up into your super degenerate stuff, which again, higher risk, right? But you can get good yields on safer platforms. You don't have to be playing the ultra hardcore gambling game all the time trying to get rich overnight. If you could make a plan where you're going to be able to retire in 5 years or 10 years, that's crazy. And you're going to gamble it all trying to get rich overnight instead of taking what's let's not say a certain thing, but something that has a very high degree of certainty of working out in your favor, being an investor, getting the yield, getting the lending happening. And of course, you also have to take in account staking, Cardano and Ethereum, Polkadot, and lots of other really cool coins can get you some sweet staking income. The best way to make a lot of money staking, get in early, right? Get in before those coins go to the moon. Always be staking your coins. If you're not staking your coins, you're literally missing out on money. Only stake quality coins. There's lots of coins with really high staking rates. They're just junk. They're junk, so just be careful about those. Compound your rewards as well. So, for example, if you're staking your Cardano, keep it in there, man. Keep it in there. And if you don't have to pull the profits out from that, keep compounding it. Keep compounding it. And you'll make more and more and more over time. And also understand the long tail rewards curve of any staking coin that you're getting into. How does future staking rewards affect the inflation rates? Are they really big? When's it going to end, right? You don't want to get into a staking coin that's going to finish its staking run in a year's time, necessarily, right? If you want to be in staking, you want to be in something that you can stake for years. So just something to understand before you throw your money into a staking coin. Understand, of course, too, that stable coins are your friends. Stable coins are good. And look, I know stable coins represent dirty, dirty dollars. But I'll tell you what, when the markets are this volatile, you can really, really appreciate having some stable coins on hand. Stable coin rates for lending and yield farming also totally crazy. 7 to 40%, depending on risk levels and all that stuff. You can see that all the time. And as a reminder here, at 7%, it takes 10 years to double your money. That's pretty impressive, right? So if you're thinking, how am I going to get to this higher level of money that Lark's talking about? How am I going to get $1 million saved up? Well, you do it by making more money with your money. So 7%'s on the lower side of stablecoin lending rates. Platform like Anchor, currently around 19.5%, that doubles your money every 4 years. So if you put $100,000 in, and let's assume the rate were to stay the same moving forward and it was all safe and there's no hacks or anything like that, you get 19.5%. So you put $100,000 in 4 years, you have $200,000. In 8 years, you have $400,000. And in 12 years, you're going to turn that into $800,000. If you wait 4 more years, it's $1.6 million, all from an initial $100,000 investment. The rates are crazy right now in crypto, so it's something worth taking note of here. Fifth point, realistically, you probably don't want to depend 100% for retiring early just on cryptocurrencies, and I know that may be shocking for some people to hear, but I personally do not invest 100% into cryptocurrencies. My biggest investments are in cryptocurrencies, but I'm also in stocks. I'm also in real estate, long-term planning. I want things that are non-correlated to the crypto market so that when we do go through bearish times in the crypto market, I'm fine. I'm chilling. So just a word to the wise there. Sixth point, this is perhaps a bigger lifestyle decision for you. You may not know this, but if you're rich, there's a lot of doors that can open to you globally. You can basically go and live almost anywhere you want. Most countries have specific visa classes for rich people. So if you have plenty of money, you can get an investor visa or something like that. Or if you can just be rich enough to show that you're not going to come in and, suck on the social security system or something like that, they'll let you come and stay. Lots of countries do that. So you can basically choose to go and live where you want. Now, you may also want to explore, getting a second passport or something like that. And just realize, too, that your retirement, whether you do that as an early retirement or a late retirement, may not be best done in your home country. Heck, the creation of wealth may not even be best done in your home country. You can actually get a better quality of life for much cheaper and incur a much lower tax burden in another country. Something to think about. If that's a real opportunity for you to move to another country, maybe another state, right? I know in the US, you can move to another state or to like Puerto Rico, for example, and have a totally different experience in terms of, your tax burden and stuff like this, potentially of your quality of life as well. So something to keep in mind. And that $50,000 number that we talked about at the start of the video, if you go to another country, it may be $25,000 or $30,000 a year. That's all you need to have a really good quality of life. And that's like, you're not sacrificing everything. You're basically having a similar quality of life to where you are now, just in another country or another zone within your own country. And it's just much cheaper. You can also, by the way, once you do have a bit of money, you can always consider as well getting another passport. So there's tax-free or tax-low zones out there where you can potentially go and just basically buy a passport. So there's 7 or 8 countries right now where you can basically just buy a passport, which may sound ridiculous, but that's exactly how the world works. And some people do it and they end up paying almost nothing in taxes because they don't have to live in high-tax countries anymore. So something to think about, something to keep under your hat as you go into that process, right? Final thoughts. Retiring on crypto in your 20s or 30s or 40s or whatever age it might be. It's very, very possible. And a lot of people have already done it. And when I say retire, it's really about achieving some kind of financial freedom where you do what you want to do instead of doing what you have to do. And it's a very different life at that point. Anybody can do it. You can do it. Yes, you listening, you can achieve this. Hopefully, my thoughts that I've shared in this video will help you remain aware of the risks and help you see from an investor's perspective on how you can make that happen. So I hope if any of this has sparked a bit of interest in your brain, that it'll be useful for you and that you can actually plan for how do I achieve this? What is my 5 or 10-year plan to make this happen? Anyway, just my 2 satoshis for the day. Your question: are you planning on retiring early, achieving financial freedom within the next 5 or 10 years? Is that already something on your plan, or have you already done it? And if you have already done it, if you're already living that financial freedom lifestyle, how did you do it? And what would be your advice to anyone wanting to do it? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.